Good morning, everyone, and welcome to the Morning Edge webinar. Blake's out today. He went to the Guns N' Roses concert last night, so he's out this morning. But we've seen some pretty good reaction here in the dollar, and we're just going to move this out of the way. You can see here that we talked. I actually discussed this with Blake yesterday, but I thought that this move would possibly happen as we got closer to Jackson Hole, because my take was yesterday, and I was discussing with Blake, is that quite possibly the Fed may want to err on the side of caution, and so they may, even though I was looking for a rally for the dollar in the first week of September, I was pointing out to Blake that I thought, when they come in at Jackson Hole, they may take a stance of where they're going to be a little bit more cautious, which would open the door for dollar weakness first. And so instead of seeing a low into the first week of September, we could probably see a low into the first week of October. Well, what precipitated this move here in the dollar is because Fed Williams posted a paper, and that's what got things going. Says the Williams paper yesterday was pretty dovish, so people were selling the dollar. Dollar yields are low pretty much across the board since the release, says city strategist Josh O'Byrne. And there was also talk about, they mentioned also about the BOJ, because we haven't heard much from the BOJ, which is a concern as if maybe they're not taking any action. But it says there's a feeling that Japan may not have much left up their sleeve, and the Fed does seem to be backing off, said O'Byrne. The Japanese have been surprisingly quiet, and people in general are talking about a not less intervention. Verbal intervention really stepped up when we were seeing the fast moves in yen, and this has been more of a grind, so it's harder for them to argue that there's been a disruptive market. The dollar trade as low as 100.15 yen. Obviously, we've broken 100 already, but it says the lowest since the inflation of Britain's vote in June to leave the European Union. It's weakened to a 7-week low of 112.58 per euro. Actually, we're at 12.80 right now on our highs. We've got a little level here at 12.82, and I'm also looking at 12.96. But you just can't fight this. I mean, I was long the dollar CAD, and I got stopped out overnight. And we're still pressing even lower here in the dollar CAD. We're almost at our lows now at 28.24. But it says the Japanese have been surprisingly quiet, as I mentioned, and also indicates the dollar is being weighed by the limited appetite for Fed trades and this strengthening in emerging markets and commodity currencies, said Stephen Gallo, strategist with Canada's BMO. So it says markets will look to U.S. data later in the day, including consumer prices, housing starts, and industrial output. But like I said, it says the key risk to our view for far more yen strength is, of course, a more aggressive easing by the BOJ when they meet next, is Hang, who expects the dollar to be trading at 96 yen in 3 months from now. But so far this year, they have disappointed and failed to turn around the sentiment, he added. Now, we're right on their highs at that 30-minute level, which is 12.82, but we have a level on the 2-hour at 12.96 here in the dollar yen, the euro dollar. Now, the reports coming up today are going to be CPI. That comes up in about another hour and a half. And let's take a look here. We've got building permits also at that time. Housing starts. And we have industrial output and capacity utilization. Now also the crude oil continues to stay right up here at its highs, which we have option expiration tomorrow, which is just continue to provide a bid under this crude oil. But we're right now at 12.84 in the euro. We're going to move into the charts, but this has been the key story today. Has been, with the with Fed Williams basically knocking the dollar for a decent loop. And let's go and move into the charts. Okay, now we got the euro pressing on its highs. Obviously, like I said, Fed Williams, he's the one that basically kicked the dollar downstairs. And, like I had that discussion as I was mentioned to y'all. I had a discussion with Blake yesterday, and this is what I thought might happen, but not till Jackson Hole. My thought was the Fed would err on the side of caution, because there was just nothing for them. Why should the Fed be the one to take the, I mentioned it yesterday in the analogy. I said, why should the Fed be the one to take the bullet for the team when the rest of the team are retreating? And that being the other central banks like the BOJ, the ECB, the BOE, they're all engaging in quantitative easing. So why should the Fed turn around and step up and take the bullet for everybody when everybody else is retreating? So that was my take, but I thought that probably wouldn't come up until Jackson Hole. And obviously Fed Williams' paper posted, I guess, late yesterday, or he's on the West Coast, I believe. So that came out later, and that's when the dollar had a chance to go in and react at that point, and hence we've seen the sell-off and the continued sell-off as we've just pushed these levels across all the pairs straight across the board. We're seeing it here in the euro dollar here on its highs, the dollar CAD on its lows, Swissy on its lows, cable on its highs. I mean, it's all the way across the freaking board. Even gold has rebounded to go to its highs of the day. And you remember how gold had been weak over the last few days. You see what I'm saying? It basically, Fed Williams basically turned the market on its head. Because like I said, it's not just one thing. You can say, well, the euro's trying to push it up a little bit higher, but this, I mean, like I said, it's all the way across the board. Euro on its highs, dollar yen on its lows, dollar CAD on its lows, dollar Swiss on its lows, Aussie dollar right about at its highs, cable just right there on its highs for the day. So that's what I'm saying. You're seeing it across the board cleanly. I mean, it's just not like, well, the euro is on its highs, but dollar CAD is holding up relatively well, and Aussie's just kind of struggling. Now I mean, it's all the way across the board, complete dollar selling. Well, Amanda says, if the USA economy is so good, why won't they raise rates? Aren't they concerned about inflation? Only retail sales was a miss. Even saw wage growth. You missed the point. You missed the point. That's what I was saying yesterday. Why should the U.S. take the bullet for all of y'all when y'all aren't even doing your own part? You see what I'm saying? And I'm talking about your own central banks. So that's what I'm saying is why the economy is doing pretty good. Is it on fire? No, but it's doing pretty good overall when you look at the mess that the world's in. But like I told you, trying to analogize it, why should we take the bullet when y'all can't even defend your own turf? You know what I mean? That's what I'm saying. A lot of people say, well, why can't the Fed raise rates if they think everything's so good? Why should we raise rates? And I'm talking as if I was with the Fed. Why should we take the bullet when y'all forget? Y'all aren't even defending your own turf. You're in retreat, i.e. quantitative easing. Hey, y'all in the UK, are y'all defending your turf? Heck no. You're going in retreat. You're going into quantitative easing. Okay, let's go to the Eurozone. Hey guys, are you defending your turf? Heck no, you're in retreat. You're into quantitative easing. Okay, how about y'all, Japan? Are y'all defending your turf? Heck no, we're still extending our quantitative easing. Okay. How about you, RBA? Are y'all making a stand with us? Oh no, we just cut rates. Okay, or just about to. How about you, New Zealand? How about you? Oh no, sorry, dude, we just cut rates. So why should the U.S. stand up in front of everybody else and say, you know what, we're going to take a bullet for the team? No, it makes no sense. This is exactly what I was talking about yesterday. But I didn't expect it. I told Blake, I think this is what's going to come up in the Jackson Hole. But as Blake aptly pointed out, he goes, well, that's not for another 10 days. Well, apparently Fed Williams, he came out with this paper overnight or late yesterday on the West Coast, and that's what sent the dollar spinning lower. And Amanda says, we'll look at let me take a look. Because they would have been saying, they were saying about the dots all along or online. Yeah, but you understand is, you know, here's the deal y'all miss. Y'all want to hold the Fed, because it's really about trading. So I know some of y'all are pointing out your own comments. We got the euro on its highs. You want to hold, and so many of y'all want to hold the Fed to a rigid, and gold is at 1360. Y'all want to hold the Fed to a rigid set of rules, but you won't hold your own central banks to a rigid set of rules. Why? I mean, wasn't Haldane the one talking about raising rates not that long ago? Oh, well, you have to see, you have to understand. We had Brexit. Oh, okay. What about the Eurozone? Well, you know, we're really sputtering with growth, and you know, we're having to deal with the Brexit. Okay. What about Japan? Well, you know, we're having a lot of problems because, you know, we don't have, you know, enough babies being born, so it's really hard to really push this. Everybody's got a reason. But you want to hold the Fed to a stringent set of guidelines, okay? You want to act like the Fed signed everything on a piece of paper and it's a contract. But you give your own central banks all the leeway they can have. So that's my point is I thought that this would happen, but not till the, you know, once we got into Jackson Hole. Because I said, you know what that guy was saying makes a lot of sense. Will the Fed prefer to possibly be, what he was saying is, maybe even risk, and we're at 1292. We just hit 1296 here on the year dollar. You see that. My take was, just so that everybody's all on the same page, my take was, which was what that guy was saying. I told Blake, I thought that was an unbelievable, that was like spot on. It's like, wow, I think that's something important. I go, maybe the Fed may just choose to be behind the curve a little bit. Why should the Fed rush in when all you other people are not only defending your own turf, you're in full retreat, i.e. QE. So my point is not to call anybody out. It's saying is so you understand where the Fed is standing. Why should we, if I'm with the Fed, why should we take the bullet? Why should we in the U.S. take the bullet? All y'all can't stop printing or engage in a new printing. You know, they raised rates once, they would have raised rates again, but like I said, they weren't going to raise rates right before the Brexit, and now we had the Brexit and everybody was all worried, but now the BOE's engaging in quantitative easing, but you want us to raise rates. You're engaging in quantitative easing, but you want us to raise rates. That's my point, so that everybody can understand. So you see, oh, okay, now it makes sense why this euro is rallying, and it's something that's not. But as I mentioned to Blake, is the flows are still against the dollar. You can't deny that, because I remember when I tried to short the dollar, you know, after the FOMC, the flows are going against the dollar right now, and you're not seeing any let up at this point. That's what I was telling people. I was talking to people in the chat room. You're going to have to let this play itself out, because what's happening is the reason we're going into highs right now is they're waiting for the New York-based traders to come in, and they're going to try and push those stops for all it's worth. But when you see, here's the deal, when you see something materialize, it's all brand new, you have to let it play itself out and see, does it change the dynamic? Because it looked like the euro may kind of like weaken, wobble, whatever, but this changes the dynamic, because essentially what Williams is saying is they won't even raise till December, and they may even wait till the first part of next year. So that changes the dynamic. Let me see. James says the economy is just the cleanest dirty shirt in the dirty clothes hamper. Well, the thing is, it's hard to argue that when we got 5% unemployment. And inflation, there's really no real inflation for the most part. You see what I'm saying? At the end of the day, for everybody that's all the naysayers, all you have to do is point to unemployment. 5% unemployment. Let's see, the Eurozone, 10%. And they were jumping up and down and celebrating because not that long ago it was 12%. So 5%, yeah, it's hard to argue that everything's really bad here. It's just everything else is bad around the world. Well, Amanda says, I'm not talking about defending the other central banks, I'm talking about the communication in the run-up. Yeah, but that's what I'm saying is you know, the communication was they would be looking to raise, but if everybody else is cutting, why are you going to do that? You see what I'm saying? If you want to analogize it again, the same thing. Let's say you're thinking about buying a house. Like, I'm really thinking about buying a house. I think, I'm going to buy a house probably within the next 6 months. I'm definitely going to buy a house then. And then all of a sudden, within 6 months from now, the economy is in recession. And the economy's weakened and everybody's having a tough time. And your friend goes, why aren't you buying a house? You said you're going to buy a house 6 months ago. That was your communication. Why aren't you buying a house? Why am I going to buy a house if we're in a recession now and prices are falling? Well, that's what you communicated. That's what I'm saying is y'all want to hold the Fed to a stringent, black and white contract guidelines, but you don't hold your own central banks to the same thing. That's my take. It's not about the communication. You have to look at the reality. That's what I'm saying. So, so that you have, because if not, you just throw your hands up and say, all this makes no sense. Yeah, it makes sense, because why should the Fed, once again, take the bullet? And that's why you're seeing gold rally up, the euro rally up, and you want to say, oh, it's all because it's all fake and the Fed should have done it. No, the reality is if everybody's cutting, why, if the economy was on fire, I mean, it was ridiculously on fire, then you should still go and cut anyway. The economy is doing good, but wage growth has been tepid. And reason, because these companies have not wanted to go on and give any wage growth. That's what I'm saying. But so that's why they're saying, why should we start to put on the brakes right now? Which is what the Fed's saying if they were to raise rates again right now. Why should we tap on the brakes when all the other central banks, they're not even coasting. They're actually pushing on the accelerator. But y'all want us to tap on the brakes a second time? No. And that's what I'm saying. So because he communicated that, that's why the dollar's taking a pretty good whack. And also it's got the flows against it going right now. Well, they're not behind the curve. Steven says, dude, many participants have voiced a concern for years now that the Fed's behind the curve. How's the Fed behind the curve? The Fed's not behind the curve because you're not seeing inflation take off. Crude's rallied, but crude, not that long ago, crude was with the $20 handle. I'm not saying there's not some inflation, but you're not seeing it, and productivity remains high, and wage growth hasn't taken off. So how's the Fed behind the curve? That's what I'm saying. Is so many of y'all, you just have that in your head that no matter what, it's everything against the Fed, no matter what. I'm not a cheerleader for the Fed, but I'll tell you what. Hey, let's look at what we were in 2008. Let's look, like I said, Janet Yellen she has one word to say for all the naysayers: scoreboard. I'm just saying they made money on all the bank bailouts, on the Freddie Mac deal, all those, they made money. So it's just hard to argue, other than just for the sense of arguing, the Fed's behind the curve. How can they be behind the curve when global growth is just in tatters? We're doing relatively well here in the U.S. We're not doing fantastic, but relatively well when you look at 10% unemployment in the Eurozone, and that's down from 12% unemployment. Well, yeah, Frederick makes a good point too. Frederick says the weak dollar is good for the U.S. market, right? Exactly. That's what I'm saying. So why is the Fed, like I said, doesn't mean the Fed's going on quantitative easing, but if everybody's cutting, then why should the Fed be trying to raise rates? They're going to, but they already have when everybody said they would never raise rates. But that's what I'm saying is because of that, now the dollar's taking another whack. But ultimately it ends up working. That's what I'm saying, to be quite honest with you, the reason why we haven't been able to take off is because the global economy is in crapper. But the reason we've been able to keep rates so low, once again, is because the global economy is in the crapper. Because all these other central banks are cutting, so a lot of people will continue to buy our debt and keeping rates, overall rates, lower because of their search for yield. So anyway, that puts us where we need to be. That should explain everything to everybody. Everybody understands kind of like where we're at right now. So nobody should be shocked and say, this is unbelievable. It's all fake. It's all this. Now, I'm saying that was his take. His take was, maybe the Fed needs to go on and see more inflation. What he's saying is here it is. Well, you can't see it, but I'll point to the story again. It says, The trigger for its weakness overnight, there being the dollar, was a paper from San Francisco Fed President John Williams, arguing that central banks, he didn't say just the Fed, but obviously, he's not with the BOJ or the RBA, but he says he's arguing that central banks might have to raise their inflation targets, focus more on growth, and back much looser fiscal policy in the future. Well, if that's the case, then he's not going to be raising anytime soon. And what he's pointing at is, before we start raising, let's make sure we got growth entrenched and also wage growth. So with that, and the flow's already working against the dollar, that's why you're seeing this stretch right in here. And so, like this morning, I took a scalp against the euro, and I told people it was a scalp because I wasn't going to hang around. We came back towards this 1255, and we'll go and point this out. If you see, my whole thing about talking also was, you can see this pullback from this area down here right to the 1255. So the zone is working really well. And we talked about this more in the chat rooms, it's 1274. And we pulled back. Not a whole lot. Like I said, it was only going to be a scalp. I got knocked out of my dollar CAD last night, overnight. But the thing is on the euro, when you see a new dynamic, and that's what I was trying to convey to everybody when I was talking about, the little mini rant about the Fed. Because so that people don't say, oh, it's all fake, they force this, they force that. Look, when you see, and we've come up to this key level, because we talked about this before, the 1282 and the 30-minute, which they're on a different time frame now, and the 1296 on 2 hour. When you see something new, not just some kind of off-the-cuff comment, but something new, like a new dynamic, and on top of that, you have the flows against the dollar, you have to let the thing run. You just have to let it run. I mean, there were areas that I was looking at stopping points for the Canadian dollar this morning in the European session, and looking actually towards where I thought, my stop was, where I thought, hey, we're going to have to make a hold here. And really, the dollar CAD, its move was being predicated on what was happening in the crude oil market, which was retaining its highs. But when you see something new, a new dynamic, like we just saw because of Fed Williams saying that, which already the market was along those lines, looking at, is the Fed going to raise? Is there a chance they'll raise? I mean, do we need to be pricing in that they're going to raise in December? What are they going to say? And that was my take, was when they're going to say is going to be at Jackson Hole. Well, Fed Williams, he jumped the gun on that. I mean, he didn't wait for Jackson Hole or whatever. I mean, he, like I said, he posted the paper. It's already laid the point where the dollar's going to go. Chad says, yeah, but Williams doesn't have a vote. Yeah, but here's the take, and that's a great point by Chad. But the thing is what people are thinking is, what's the Fed's mindset right now? Because people are even thinking, I go, do you think they might possibly raise before September? Nah, probably not, because they don't want to affect the election. But you know what? They're probably going to price in to be raising in December, okay? And I would have argued for a point in December. What we're looking for is, what the market is, what you have to understand is the environment we're in. They're hungry, the market is hungry for some kind of a take. We know it's in August, it's low liquidity, and the market is hungry for some kind of a take. Like, here's the deal. We saw the rally after here's the thing, we'll look at it this way, via the euro. We saw the rally after the FOMC, okay? And we came up here, and then we finally, went and pulled back, okay? But it looked like the overall flows, well, that's pretty clear, we knew that, were really against the dollar, okay? So when we saw the first move, everybody's like, well, hey, the flows are against the dollar. So we finally saw the dollar going in and pull back in. Pull back in, especially after we had the, NFP, whatever. And we've seen the dollar going in and pull back in, and on Friday, we saw one more or less move up right in here. And it's like, oh, okay, great. Now the euro can get moving. But people thinking, hey, you know what? Maybe this is it. It just doesn't look, and I was even looking at that myself. Hey, this might be it for the euro. we may just have to go and work lower. And I even argued, I go, hey, we could be working lower this week. But, like I said, it is August low liquidity, but I thought with that guy, and I can't remember his name, it was like, the last name was Toe or Rowe, in that Reuters piece, and I tweeted it out, he talks about, that was over the weekend. They asked him, and he said, about with Fed, and he goes, what they may just want to do is they may just choose to be a little bit behind the curve. I'm like, whoa, if that's the case, then forget the dollar putting in a low in the first week of September. I told Blake yesterday, it may not be till the first week of October. Now, that being said, I thought I thought this would be communicated at Jackson Hole. Well, obviously, it happened about 8 or 9 days before Jackson Hole. So now we've got that move that I thought, uh-oh, that might be the move. But I thought, hey, we may come down here and have to do a little work. Then they'll say something at Jackson Hole, now shoot us back up here. But obviously, Fed said that. Now, Chad makes a good point. He's not a voting member. Yeah, but they haven't heard anything from the Fed, and they're already asking, what's the take of the Fed? What are they going to say? So they're hungry for anything that's going to come out of the Fed. So this guy probably, he doesn't speak for everybody. Obviously, he's not for Esther George, who's looking to raise, but he probably speaks to the general mindset of the Fed. He doesn't speak for everybody, but he probably speaks to the general mindset. So that's where, like I said, where we've seen this run up in this big run up here in the euro. From an overall picture, we'll take a look at this, and then we'll take a look at the other pairs, the other majors, and then if y'all want to look at the cross rates, obviously we'll take a look at the euro pound. That's key. But other cross rates, whether it's Kiwi yen or the pound yen or whatever, we'll certainly do it. Take a look at that. Now we'll take a look here on this 2-hour chart here on the euro, and we had a pretty good decent run. And we're going to take a look at how far this thing can go. Let's go and take a quick fib on this. So 13.15 is actually the 78%. And that's probably where they're going to want to shoot to, because it's not that far away. Doesn't mean we can't back away from here. 1296 is kind of important, but ultimately they're probably going to want to make a run for this 13, see if they can goose the stops above 113. They certainly have the flows going in their direction. Bring this in here. I'll move it later. But it certainly looks like this is where they want to go to. This 13.15 is a 78%. It's actually also confluencing here. You see the 13.12 right here. You could probably even move this up a little bit higher. We'll have to see as CPI comes out, but obviously things are just weighing against the dollar, and we've got a new dynamic now, which it looks like, even though Chad makes a good point, even though Williams is not a voting member, he's still, like I said, just like when they talk about starve for yield and they're going for, buying anything that yields. I'm talking about as far as paper. Well, it's the same thing right now. The market is starved for any kind of news on the Fed, some kind of take. And I think that even though Williams may not be a voting member, he speaks to the general mindset of the Fed. Now, we're going to take a look at the other pairs, and what we'll do is I'll take it all the way almost at the top of the hour, and then we're going to take an extended break. So I'll only take one break, and it's going to be an extended break. So instead of taking, a few minutes here, a few minutes there, a few minutes here, I'll take a very extended break around the top of the hour. And that'll be the only break for the entire show. So that's why it's going to be extended. So, but right now, this looks like this is where they'd want to go to. We'll go in and see if we can pull this back. I mean, for starters, let's go and back this up a little bit. This 1338 is pretty key right here. right in here. I mean, markets always look the most bullish as we're making highs or whatever. But my concern is that the market has spent a decent amount of time in this area doing a lot of work. So the move higher, it's it's not like as if you can say it doesn't mean we won't back off a little bit, but to me it looks like the market won't need to take a rest until we at least get to 13.15 because of the amount of work that was done here, and ultimately this 13.38 is pretty key. Now, obviously, because we're in the dog days of August and there's not a whole lot of liquidity, you have to be careful because these markets can really get going in one direction. And that's what I've tried to point out. I mean, I took a scalp this morning, but you have to be a little bit careful because we're just not into that good liquidity. And Steven says, wow, JPY continues to go. And Granny Big Pip says, is Blake on vacation today? No, yeah, just to, in case you guys coming in now, Blake went to the concert, Guns N' Roses concert last night. So he wasn't going to get out till very, 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 very late. So that's why he's out today and I'm covering for him. But like I said, just to once again reiterate for those people that are coming in, the big move was because Fred Williams posted a paper late yesterday. I guess he's on the West Coast, I believe. But anyway, and basically on his paper that he posted, he said, says the trigger for weakness overnight was a paper from San Francisco's Fed President John Williams, arguing that central banks might have to raise inflation targets, focus more on growth, and back much looser fiscal policy in the future. Well, if that's the case, well then that's what kicked the dollar downstairs. And the flows were already going against the dollar, although it looked like maybe the dollar might tire out. And just for a quick little recap is, this is what I argued with Blake, or not argued, but the point I tried to make with him yesterday morning is the gentleman that I saw interviewed on the Reuters piece, and he was saying, they're asking when the Fed would raise, and he said, quite possibly, because we don't know, but quite possibly the Fed may just choose to be a little bit behind the curve. And that was my my take. Was it, hey, you know what? This might be what's going to come about. But I didn't think it was going to take place till Jackson Hole. And Blake said, aptly, like I said, Blake pointed out, well, Jackson Hole's not for another 10 days. Like, oh, yeah, okay, but I think that's might will play out. Well, Fed Williams jumped the gun and basically, and the market is starved for any kind of take on what's the Fed going to do? What do you think the Fed's going to do? So even though, as Chad once again pointed out correctly, he's not a voting member, he speaks to probably, obviously not for Esther George, but he speaks to probably the general mindset of the Fed. So if he's the only one that's talking right now, everybody's going to listen to him. And what he's saying isn't radical. I'm saying it kind of makes sense, like, oh, okay. Yeah, I guess so, because we've got 5% unemployment here in the U.S., but it's not like the economy is like zooming, and wage growth has been tepid. You know what I mean? Like I said, it was only two NFPs ago that we actually saw wage growth decline. So you can't say, for those people that keep saying the Fed should be raising, hey, and here's the deal. People keep wanting to hold the Fed, but Janet Yellen said this 18 months ago. She said, we will normalize when we see sustained job growth and sustained wage growth. We've seen sustained job growth, but we have not seen sustained wage growth. It's been tepid, very, quite tepid. We got a 0.3 this last time, but the prior month we got a negative 0.1. That's what I'm saying. So when you look at what he's pointing out, it's not anything that's like radical. Like, oh, he's probably just gone off the reservation, so to speak, as the saying goes. No, it's like, you know what? He probably speaks for the general mindset. And with that, and the flows against the buck, that's what sent it rallying up. I mean, I didn't see this happening. If I'd have seen it happening, I'd have bought the euro yesterday. But I saw it happening, but not until Jackson Hole. I thought, hey, they're not going to come right out and say they won't. and I talked with that about Blake, but I think that that's what the general idea is going to be, is that they're going to hint that, hey, we're going to kind of wait, we're going to take our time. Well, Williams didn't wait, and he basically stole the thunder from the Jackson Hole, and that's where we're at right now. And the flows were already against the dollar. So it wasn't that hard for them to push them up higher. And if it's a new dynamic, you know that they can push even higher. And as I said, you have to look at it this way. The market's done a lot of work in here. So technically, it can break much higher. I'm not saying it can't run out of gas. It might even stall a little bit here. My take is I think it would augur from a risk reward to see if you can wait for this move. And you'll probably get a more sustained pullback if we can gun the stops above 113. The place, if you want to make a stand, is actually here at 1338. That's where you want to first really make a stand. But if you want to scalp it, I mean, I scalped it this morning against 1274. Yeah, right here, 1274. And covered right before we made it back here to 1255. And that's a scalp. Believe me, like I said, it would. I thought, the market might start to tire, and we did start to tire. But you're seeing it across the board. And what I pointed out just a little while ago, and we'll start to move into the other pairs. Euro dollar on its highs. Dollar yen on its lows. Cable on its highs. Swissy on its lows. Aussie on its highs. Dollar CAD on its lows. You can't even point to one pair and say, the dollar CAD's holding up really well overall. The Aussie dollar, they're really just holding it back. It's all the way across the frickin' board, including gold. And I've been bearish gold and we've had some nice dips. Here's gold pushing to its highs, recent highs. Euro on its highs, crude on its highs, but that's on its own thing. Dollar yen on its lows, cable on its highs, Swissy on its lows, Aussie on its highs, dollar CAD on its lows. You tell me where there's a divergence. And that's the way I trade. I look for divergence. I say, I like kind of shorting the euro here because I am seeing the Swissy holding up. We're seeing the divergence from the Swissy. It's coming back. And the dollar CAD's, no, we're not seeing any of that. That's my point. It's not like, well, the market's on its highs, so I'm saying don't short it because it's on its highs. No, I'm looking for divergence. That's why I don't even trade the Swissy, and I haven't been following the Swissy for a long time. But I look at the Swissy lately a lot because it tends to call good moves in terms of the euro. And like I said, that doesn't look very bullish at all. I mean, forget bullish. I mean, I'm just talking about bullish from a standpoint of, hey, I see something. It's starting to hold. No, I don't see anything. So, earlier in the morning, when I had scalped the euro at 1274, the Swissy was holding at 96.45. It already ticked down to 38. Now look at it. So why the hell are you going to go and step in front of the freight train right now with the euro? That doesn't make any sense. That's what I'm saying. I need to see this hold. The Swissy right now, we've got this level here coming up at 95.97, which would take out the stops at 96. Obviously, there's a bigger level here. We'll post that up, which is 95.80. We'll mark that off. I'll tell you what, it was no fun time getting stopped out of my dollar CAD, which looked pretty good at the time. But when you see something like this, I'm the kind of person that might, sometimes I'll try and rationalize something. Go, well, you know what, maybe I'll need to adjust my stop. But if you see something big like that, you just can't, there's nothing you can really do to deny what's taking place. And obviously, like I said, the flow's already going against the dollar. When Williams says that, that's pretty tough stuff. Now, we just came just past the 78%, and we'll mark that off. Smooth this down here. When you see something like that, that materializes like that, if you're, if you have the trade going the other direction, you just basically have to take your medicine, and that's it. I mean, if something like that, where a new dynamic has been set, in the sense, a new dynamic in the sense that nothing had been communicated, and the market was already looking for some take from the Fed, and what he's saying is not completely radical, then it makes sense that the market's just going to go with that. And that's why you're seeing, and why that makes sense, and what I've been saying since I came on for Blake. If anybody isn't aware, Blake went to the Guns N' Roses concert. That's why he's out today, and I'm filling in for him. But that's why, like what I'm saying is, like a new dynamic. The flows were against the dollar. That's why you're not seeing the dollar being defended as we keep on going low. You see, we're making lower lows and lower lows. I mean, the next level is 95.97 here on the Swissy. 96.15 is the 78% of this move of 95.21. Back it up. Here we go. This last recent move. 95.21, this recent range, to 99.50. And if we were to dip down here, 95.80 is pretty key. But right now, you're just not seeing the dollar being defended. And that augurs to what I've been saying is that new dynamic, which is what I thought might happen at Jackson Hole. I didn't think it was going to happen until Jackson Hole. But now, obviously, once again, Fed Williams jumped the gun. But he gave his 2 cents, and his 2 cents makes a lot of sense to a lot of people, in the sense that it's not radical. And now you're seeing why you're barely seeing any kind of defense of the dollar whatsoever. Steven says the Fed can't fix low wage growth. Yeah, Steven's right. You're spot on. So what they're saying is we can't fix it, but we want to have a conducive environment to see if we can give it that extra leg. You know what I mean? It's like having a cast on, and you're going, I had the cast on for 5 weeks. It feels pretty good, Doc. I think I could take it off. I mean, how does everything look? Doctor looks and goes, you look pretty good, but I'll tell you what, let's wait another 2 weeks before you take it off. I mean, I'm speaking in analogies, but that's what the Fed is saying. Now, some of you might argue that the cast has been on a long time when it comes to the Fed. But the Fed's just, what Williams is saying is, we don't need to necessarily rush to take off that cast. Instead of taking off, I know you want to take it off for 5 weeks. We like 7 weeks. I tell you what, to be on the safe side, to get better inflation targets, let's wait a full 9 weeks. And that's what's happening with the dollar. Now, you see that? The euro's on its highs right now. That's what I'm saying is, you're just not seeing the dollar because it's a new dynamic. Even though some of y'all might say it's not a new dynamic, I'm saying for the day's trade, for the last couple of days, over the last few days. Yes, it's a new dynamic. That's why you're seeing the dollar not even being defended, and the euro continue to make new highs, and the Swissy continue to make, further lows. Now, 95.97 is a level, and we take out the stops at 96. And below that, 95.80 is freaking huge. Freaking huge. And 95.72 would be 88%, but this 95.80 is pretty key. Now we're going to move on to the other pairs. And if anybody wants to look at any cross rates, just let me know, and we can take a look at that. So now let's take a look at the cable. So let's move this up here. We'd come into this 28.74 area, and we were hanging around there yesterday. We dipped down there, and the market couldn't take out this 29.47. And now we got some data this morning that really allowed the cable to punch up, but obviously the dollar is went up. Now, that being said, cable's not rallying like a skyrocket, because in light of where the dollar is, the cable should have already taken out 30.19. If it really had any real strength, which the cable doesn't have any real strength, because if it did, it'd already be above 30.19 in light of the dollar sell-off that we've seen. So really, this is where the cable should be going to. Cable should have already taken out 30.19, and everybody should be pointing for 30.59 and say, man, that's where we're going. We're going to 30.59, that's 38%. So in light of everything, the cable is in fact that strong, although it's come off these lows decently. Luca says, any views on the euro pound? We're at a key inflection point here in my view. I'm looking for a top. That's what he says. He's looking for a top. So we'll take a look at the euro pound. I think 87.64 is where I'm looking at. I know that Blake's been talking about 87. I just see more here towards this 87.64 area. I don't really see a whole lot here in this 87 area. It might run out of gas on here, right here, but when I look at the touches on the weekly, this is what I'm looking at, 87.64. Actually, it's 87.58, 87.58, so we'll mark that off. Something. Joe says, what do you think about dollar CAD? You know what? It's a mess. I got stopped out. I got stopped out with dollar CAD. I mean, my whole take was I think that the Canadian economy's weak. The crude oil's really had a nice run. But what Fed Williams did, that's what I'm saying. It's a new dynamic in the sense that what he said, that's why the dollar's really gotten whacked so hard. But I tell you what, I don't like this euro pound until we get to 87.58. And we can take a look at the fib. Hmm. 87.07 is 61%, which won't stop it from getting up to 87.58, but we'll mark this off. I think we're going to 87.58, and just above that, we should really be really crazy, which should be 88.93. I think we're going to 87.58. Because I'm going by the touches, and this is on the weekly. So you see how many touches? High, cross here, basically the low here, the close, the open, cross through here, a lot of closes and opens here, all the way across the board, all the way. They can even stretch a little bit further, which is 87.75, but I'd say, go with 87.68. There you go, 68. $87.68. That's where I think it's going. $87.68. That makes the most sense to me. Doesn't mean you can't get a little bit above it, but I think that's where it's going. Andrew says he agrees. He says euro pound no top yet. Yeah, I wouldn't short the euro pound yet. I mean, if you get here 87%, 61%, that's pretty huge. That's unbelievably freaking huge because that takes you from down here to the high at 98.03. But nah, I see a 87.68. So, and look, we're right here at our highs in the euro. And cable, look at cable, it's already pulling back. So look at this is unbelievable. Here's the dollar yen, we'll come back, we'll take a look at all the other pairs. Here's the dollar yen on its lows. Here's the dollar CAD making new lows. Here's the Swiss on its lows. Here's the Aussie dollar interest highs. The cable should be above 30.19, on its way to 30.59. So the cable still remains weak, which augurs really for the euro pound to continue to move higher. But that's what I'm saying. Everything's going against the dollar right now. I mean, overall, I'm a dollar bull, but hey, it is what it is. And when Fed Williams said that, that's all the market needed. That's all it needed. So it's already time for a break, and I'm covering the show. Blake went to the concert. So, Blake went to the concert. So, I'm taking one break for the entire 2-hour session. So it's going to be an extended break, basically about 12 minutes. So, just one moment. So if everybody's wondering, hey, what happened to that guy? I'm putting it in the notes, and I'm putting it on the news. That way everybody can see it. And thanks for joining us here, and we'll be right back after a good break. David says, good advice today. Paul, yeah, I mean, you have to be careful. I mean, it is what it is. I mean, it was no fun getting stopped out of the dollar CAD, but I mean, you see something like that, and we're already in August, low liquidity, the market is starved for news, and the Fed head makes his comment, even though, as Chad said, he's not a voting member, I think he speaks to the general mindset of the market, of the Fed. But we're going to take our break now, and we'll check back with you later. Thanks.